All right, as everyone gets seated here, thank you everybody for coming and joining us here in Abu Dhabi. Today we're standing at one of the most significant transformations in decades. The MENA region from Saudi Arabia to UAE is rapidly emerging as one of the critical hubs for global digital infrastructure. AI has become a catalyst unlike anything we've ever seen. It's not only transforming tech companies, it's reshaping power markets, land markets, capital markets, and even the physical realities of how we design and build next generation infrastructure. The impact is global, and this region is becoming one of the leading frontiers of that change. And all of this momentum is driven by the explosive growth of AI. Company valuations are rising far faster than revenues. Massive facilities are being built in places no one expected, and many capital investment plans hinge on future demand that has been completely unprecedented and unproven, right? So all of this leads us to the first and perhaps most important question at this conference. Are we witnessing the beginning of a new industrial age, or are we seeing the early signs of an AI bubble? Okay, to answer these questions, our panel of experts are going to tackle these issues. So we'll start on the very far right with Greg. Greg, introduce yourself.
Good morning, everyone. My name is Greg Jasmin. I'm the head of international client development at Khazna Data Centers, a G42 company. And Khazna has been in the region, homegrown in Dubai for the last 14 years, and look forward to this discussion this morning.
Okay. Next, Kamel.
Good morning. Hello? Yes, this doesn't work. Good morning. Thank you, everyone, and thank you, Joao, for coming to the Middle East. This has been long overdue, so great to have you here and great to have everyone. So my name is Kamel Tawil. I'm the Managing Director for Equinix for the Middle East Africa region based out of Dubai.
Hello, everyone. I'm Tom Blackwell. I was part of the sort of founding senior management team of Nebius. We're a Amsterdam headquartered, NASDAQ-listed AI infrastructure business, building up AI-focused data centers and sort of AI cloud infrastructure, servicing AI startups to enterprise customers around the world.
Good morning, Scollay. I work at Do. Do is a telecom company that also has a data center arm. I was brought here from Singapore. My background was around 13 years between Tokyo and Singapore, mostly in the data center business, and now helping to grow Do's digital platform here in the UAE.
Okay, and I'm Miles Liu with Newmark. I've been in commercial real estate for over 30 years, started when I was 9 years old.
Me too.
I've been in data centers for over 25 years and started the very first data center valuation practice anywhere for the industry right after the dot-com crash. And in the last 12 months, my team has valued on 6 continents over $400 billion, US dollars, okay? So anyways, let's start off with the heat wave of demand in UAE. So we're witnessing an unprecedented wave of AI infrastructure spending. Global tech giants are on track to spend as much as $400 billion this year into data centers and chips. So the surge of demand has set new leasing records in the US, including a remarkable 7.4 gigawatts of activity in just the third quarter. That's more leasing than 2024 combined. So here in the Middle East, the hyperscale market is projected to reach 16.4 billion by 2031. But this massive, largely pre-revenue build-out has raised a fair question. Are we seeing real proven demand, or is this simply capital racing after global AI hype? So Ross, let's start with you. Global leasing and capital spending at record highs. Do you believe the UAE's rapid build-out is being driven by genuine long-term AI workloads?
I think it's relatively sustainable in the UAE, and the one thing that the data point that points to that is the fill rates. So we're looking at incredibly high fill rates in this region, which shows that there's not over speculative building, certainly not now and not foreseeable in the next couple of years. Overall, of course, we are watching a very, very rapid build-out. I arrived to this country just 3 years ago, and the total megawatts of data centers was about 130 megawatts at that time. It's now reaching up to 400, depending on how we count it, or more even. But certainly, it's grown very fast, and it will blow past 600, 700, and then 1,000 in relatively short order, certainly by 2030. So that level of build out has to be underpinned by a certain amount of demand. Most of the people I talk to these days want to talk about is this a bubble or is it not a bubble? And certainly there's a huge amount of speculation online in the mainstream media and also in social media about whether or not that's the case. I think it's too simple a question. Really, you have to delve into the relevant parts of the industry in order to ascertain that.
All right, your time's up. All right. Tom, let's jump over to you. As a NeoCloud tenant, your growth depends on proving out new AI workloads. So from your perspective, is infrastructure build-out a smart long-term strategy, or are you forced to scale so quickly that you're getting ahead of the demand that you clearly see and monetize today?
Well, we think that infrastructure build-out, it's not just smart, it's necessary to support continued AI workloads. I think that in terms of demand, just to give you an idea of our scale and where we come, so we started this business relatively recently, July of last year, so we're a year and a half into it. I think at the end of last year, we had 25 megawatts. At the end of this year, we'll have a couple of 100 megawatts. And end of next year, we've guided the market towards about a gigawatt of connected power next year. So we're scaling very quickly. But what we're finding is that actually everything we build gets sold immediately. So we launched a data center in the UK a couple of weeks ago. Even before we were online, everything was pre-sold. Same in other markets, and that dynamic we believe is continuing. And we think that we can debate the AI sort of bubble question. Ultimately, you need to break that up into segments. Not all AI stocks are the same stocks, and not all of the AI players are the same. And we can develop that today. But one way or another, we see demand continuing to grow. And actually, the real growth of the next coming years is enterprise adoption. That's going to make this massively bigger than it is today.
Well, in your last earnings call, you guys announced that you guys are guiding to 2 gigawatts. So,
well, 2.5 gigawatts of contracted power.
Well, we can talk about that.
Yeah, exactly. We can come on to that.
On this. But I wanted Kamel to touch on the demand that he's seeing. So among your customers, hyperscalers, NeoCloud providers, and regulated enterprises, which group giving you the clearest indication that UAE's capacity boom is backed by real demand rather than speculation?
Yeah, thank you. So I think the Middle East is witnessing a real momentum and a real growth of cloud AI workloads. And this is really driven by the government initiatives. We saw what the government of UAE is doing in terms of digital adoption, in terms of the programs. The UAE has been a pioneer in that because if you look at the market here, the government has appointed a minister of AI maybe 8-9 years back before anyone was able to spell AI. So they had that vision. So, and I don't think it's by luck. It's by vision and long-term planning. And all what's happening now with all the investments coming to the region is very much promising. So what we have seen is there is a strong adoption among the biggest momentum now is clouds, but AI is catching up very strongly, and we've seen the investment that has happened with all the announcement with G42 and the Humane and all the approvals to bring in GPUs into the into both Saudi and UAE. But again, the proof of the pudding is in the eating, as our fellow English say. The success of that and the proof is going to see how we are going to bring more and more applications and enterprises adopting AI for real use cases. I think this has started to happening, and we've seen companies using that. But the more we have of this, the more is going to create a momentum, the more is going to create adoption and bringing the digital economy into what we call the AI economy.
Thank you, Kamel. I mean, when you talk about momentum, let's skip over to you, Greg. Global leasing is now surpassing what used to be a full year load. So in a market short on land and power, how do you separate real ready-to-build demand from the capacity hedging hyperscalers are are using to lock up land and paying reservations to secure what's available?
Yeah, that's an interesting question. If we look at the region, if we look at what we have been doing, we used to build campuses that are of 20, 30 megawatts. We currently have 200 megawatts going live next year, and we had a line out the door of people wanting that capacity, 200 megawatts. And this was just recently announced that Microsoft is taking 200 megawatts from us. And if we had more, we probably could have leased more capacity because everyone wants to be here. Why? If you look at where the UAE sits versus population centers and milliseconds to billions of people, if you think about what's coming in the future, not the training part, the inferencing, this is a perfect hub for that inferencing to happen here. And so it's not just hedging, it's actual demand based on workloads that needs to find a home. What do we have here? We have access to power, we have access to distribution, and land is not constrained. And so once a decision is made at a leadership level here in this country, or in this region in general, everyone gets behind it. From the power generation company, to the transmission, to the distribution, everyone is behind it, and we come in as a data center operator to do what we do best, build and operate data centers, and that's what we plan to do here in this region, not just in the UAE with our US, UAE AI campus, but also in Saudi and other parts of the region.
Great, thank you. You know, in real estate, the rule was always location, location, location. But in the race for AI compute, it's now power, power, power. Nowhere is in this shift has been more obvious than in MENA, where energy can make up nearly 30% of total data center operating costs in Saudi Arabia. And with Saudi Arabia and UAE pushing data sovereignty through their normal national vision strategy, the bar is rising fast. Success in this market isn't just about adding capacity, it's about securing long-term scalable power and navigating the region's growing data sovereignty and regulatory demands. So Greg, with Khazna announcing 1.0 gigawatt expansion last month, the region's clearly scaling at a record speed, but demand is still moving faster than the grid. Utilities can take years to confirm upgrades, while customers want that capacity in months. So what does it really take to secure a multi-gigawatt power campus that's needed, and how do you avoid over-promising capacity before those grid allocations are truly locked in?
Again, we go back to the strategic nature of this region. From a leadership level, the decision has been made to make the UAE an AI hub globally. And so what are we seeing then the effect of this? TAQA, the Abu Dhabi power generation company, they have made strategic decisions to buy equipment for power generation that then leads to us having capacity. And so it's not, when a decision is made, the projects move. Unlike other parts of the world, I'm doing work right now in Europe, and if I ask for 100 megawatts, I have to wait 5 years. 5 years. Where here, I think President Trump was here in May, and by next May, our first 100 megawatt of the AI UAE campus will be live, 12 months. And that's because of the strategic nature of how projects are taken here. And so we see that once the commitment is made, the infrastructure will be built. The question is, how fast can we build? And there's just a constraint to supply chain of how fast we can build. If tomorrow I can build 400 megawatts, I guarantee you there will be hyperscalers, leading AI labs, neoclouds that would take up that capacity as fast as we can build it.
Yeah, on the subject of neo, on your latest earnings call, as I mentioned earlier, the capacity constraints are limiting revenue generation. That's what your CEO said. So with Nebius laying out an aggressive plan to contract 2.5 gigawatts by 2026, up from the 1 megawatt you outlined earlier, right?
Mm-hmm.
How are you planning to secure the land and power needed to build at this pace, especially against hyperscalers and state-backed developers?
Yeah, so listen, the fact is that so we're scaling up very quickly and we're doing it very successfully so far. But the reality is we're competing against the hyperscalers and everybody else looking for the same land and power around the world. So far, we've mostly been building in the U.S. and Europe, but obviously this is a global business. I think that we come up against the same names. It's usually typically the hyperscalers when we're competing for things. So we don't have some sort of complete sort of secret sauce, or we don't wake up at 4 a.m. when no one else is looking and suddenly sort of secure land and power. We compete against the big tech players, but we have, I would say, 2 advantages. We have an absolutely amazing tech team that is just incredibly quick, fast at being able to evaluate land, power, and just a technologically savvy team that move at the speed of light. And we just have a corporation that has a culture of also kind of moving at the speed of light. So if we see something, it's sort of, a proposal comes into us, our corporate dev team, our legal team work 24 hours a day until we're done. So we're just a bit more nimble, we're faster, and we have an amazing tech team that can assess these things quickly, and so far it's working well.
I wish there were more hours in the day. But Raz, with this type of urgency, right, bringing capacity online, how are you weighing behind the meter solutions like private power generation versus waiting for the grid, utility grid upgrades? What does behind the meter solution, does that become a strategic advantage or is it simply a workaround for grid delays?
It's a great question, and it actually ties back to the bubble question as well, because one of the things that underpins revenue is power connectivity. So if all of the operators and all of the off-takers can get the power connected and get the data centers connected in time, then they can monetize them. If they can't, if those things are delayed by somewhat, and 5 gigawatts can't be delivered at the time that people think it can, then that will also restrict the amount of revenue that flows into the entire ecosystem. So that's why people are scrambling. Here in the UAE, as Greg has touched on, we've got a very pro government that is behind this, that understands exactly what has to be done. But we still face some differences, I would say, and these United Arab Emirates are not completely united when it comes to their power philosophies and regulations. So there are some differences how we would do this in Dubai, for example, versus other Emirates versus Abu Dhabi. Having said that, there's a massive amount of power coming online here. We've got 2 huge solar plants now, I think something like 5 gigawatts each. We've got a nuclear plant, the first ever in the Middle East, which has just turned on at around 5 gigawatts. So the amount of new power that's being generated, and this is not from hydrocarbons, this is technically clean power, is really shooting off the scale. And I think we're overproducing here by, something like 30%, like a huge percentage more is being generated. So the challenge now is to get that distributed to where it needs to be. And we are already starting to see some blockages, not as bad as in other countries. And as Greg touched on, in Europe, 5 years, it used to be 5 years in Japan. It's now 10 years in some places if you go and ask for those kinds of capacities. So we're still a lot faster than other countries, which means we can attract business here, and then hopefully we can start to even export capabilities, export intelligence from this market.
Amazing. So, let me ask this question to the panelists, right? Are we witnessing a long-term structural shift towards a decentralization of the power system? And if behind the meter solution becomes the default, does that fundamentally shift risk from the utilities to the capital stack? Like, should that be the equity, debt, or both?
Question 2.
If you think about it, as a data center operator, I don't want to be in the power business. I would rather have these independent IPPs, independent power contractors, to build and operate the behind the meter scheme for me. That's what we're looking at in some places in Europe, where an independent power producer can build and operate, and I'll be I'll sign a PPA for 15, 20, 25 years with them. They know they have a steady stream of revenue coming online, and I can focus on what I do best, which is build and operate the data centers. So I think that new model is going to be a solution for these places where the grid can't deliver power fast enough to where we need the capacities.
Okay. Well, if power is the constraint, capital is the accelerant. So analysts estimate AI-related capex would exceed 400 billion this year, with some calling it the largest pre-revenue allocation ever built in this century. So, but revenue from AI workloads is still concentrated in a small set of use cases. So let's examine this spending cycle. Is it a structural realignment or a bubble forming in real time? So let me ask Kamel. Several market observers note that AI monetization is materializing far slower than expected, while CapEx continues to accelerate. So if monetization lags, by another 2 or 3 years, which parts of the ecosystem, developers, cloud platforms, or lenders are most exposed?
So we need to look at it from both perspectives. Today, majority of AI investments is on training, and the people who are really buying these workloads are handful. These are the hyperscalers, the people we know, and these people are investing billions and billions and billions of dollars. I don't see that these guys are going to have any cash crunch any moment soon, because their valuations is up the roof, and they are doing great. Now, if you look at what McKinsey is saying is that what we see in AI expenditures in training we are going to see 10 times of that in inferencing. So there's going to be much more workload and capacity needed for inferencing, 10 times what we see in training. Now, the thing is, training has been focused in a couple of countries, US, China. Inferencing is going to be completely different. Inferencing is going to be a global. Training is location agnostic. Inferencing is not that agnostic. It has to be not maybe in downtown, but near the metro, because you need the latency, you need that. So you will see lot of investment there, which justifies the amount of builds we're doing, the amounts of build our Khazna and the rest are doing, and we don't see this slowing down. Of course, power is essential. The thing is, this region, we're lucky that we have power, and we have cheaper power. Even though you can go and argue that in Nordics power is cheaper, but the taxation there is much higher. So the economies of scale is in the favor of this region. Now we discuss a lot about the distribution and the grid, which is a huge problem in Europe, becoming a big problem in the US as well, in the data center mecca of Virginia. But the thing is, the grid here, it's very modern, The grid in Europe is maybe 100, 150 years old. The grid here is 30, 40 years old. So it still has the capacity for distributing these workloads. So we don't see really a big hindrance for that momentum. If we talk about the others, so we spoke about demand, it's there. We spoke about power, it's there. Financing that you mentioned, the thing is, the government and the sovereign funds of the region has put their weight behind digital infrastructure and behind AI. So they want to ensure that the agenda of AI in the region is a priority, and they are putting their dollars where their, I don't know what to say it in English, you put your dollar where your mouth is. Exactly, sorry. So we see that. So more of that, you've seen a big development of regulations within the region, because if you want to be an AI leader, one of the things is you need to ensure is you have the right regulatory framework in terms of open data and data interconnections, and we see the TRAs within and the CSTs, so the Saudi regulator, the UAE regulator are putting a lot of effort around that to open up this. Now, of course, we still have a lot of sovereign workloads residing in the country, and that's not bad. You need that. You cannot expose all your data, but many of that data that can be interconnected, the regulator are working around that. So with land, power, government money, and regulations, you have you have what you call a perfect storm for that
You're
region
missing
to
one
become
thing.
a leader.
You're missing latency, and I think I'm having latency issues. So I'm going to move over here. In the meantime, John Atkin has a question for the panel.
Correct. We've been here 12 years. Yeah, I mean, very interesting question, because when we entered the region, our roots are more into the interconnectivity and more on the carriers hotel. So this is where we entered the region. So we had like the first carrier neutral data center in partnership with Do Data MENA, in this region around 10 years back. And back then, like a 2 megawatt data center was a big investment, a big data center, I remember when we worked with Khazna, the first data center was like 6 megawatt. That was huge, And but since then, based on the attraction of the region, this changed from more of interconnectivity hotel to becoming a more of a digital economy and digital ecosystem. So we've built that digital ecosystem in the region in partnership with the Data MENA, which we created the first telecom free zone in the Middle East, which attracted a lot of the global players to come and set up, all the clouds. So our business changed from more of carrier hotel to more of a digital platform, and we start attracting a lot of the cloud players. Most of the on-ramps. We have all the on-ramps of all the players with us. Then we saw the need of, this region has a lot of subsea cables. For example, Oman alone has something like 16 subsea cables coming into Oman. So to go back to the question of latency, these subsea cables are really key. So we opened our data centers in both Muscat and Salalah to ensure that interconnectivity within the region. And now our business is developing. So now we're getting AI workloads, we're getting cloud workloads, and it's moving. So this is why we have announced that we're going into Saudi with 100 megawatt data center. We haven't done this before, so again, we're seeing the momentum, we're seeing the growth, we're seeing that this region is becoming a key interconnectivity point between East and West. Many of the workloads in the region also are going and serving the Asian subcontinent, India, Pakistan, Africa, and we're seeing more and more of that. There is also a lot of government, intergovernment works between the governments of UAE to of Saudi to host some of the African workloads, some of the clouds, because they don't have the infrastructure. We've seen this happening in some of the countries, and this is going to happen more and more.
Thank you, Kamel. I really appreciate that. And thanks for the question, John. So everything we discussed so far comes down to one simple idea. None of this works without certainty around land, power, connectivity, sovereignty, regulation, and long-term alignment. And in this region, no single actor, public or private, can deliver that certainty alone. MENA today A world-class digital infrastructure is being built only where governments and industry can move together with purpose. So, Raz, with global cloud players, sovereignty funds, and AI operators all accelerating around builds in the Gulf, telecom operators like DO sit right in the middle of sovereignty strategy and commercial demand. So what is the one government action, whether around land access, energy policy, spectrum, or rights of way, that would most unlock your ability to deliver the speed that AI projects now require?
Great question. Yeah, so we sit obviously in the middle of this ecosystem, and actually, Equinix is an alliance partner of ours, and even Khazna, we were once a founding shareholder of that. So we're all somehow cousins or nephews or something of each other. But DO is a bit unique because DO is the telecom company, and that's our core business. The data centers kind of sit on the side of that. And we're lucky in a way that because we are a long-term player here, we've built up a retail business and hyperscale business and now AI business. So we essentially have 3 separate business lines, and they really are separate. Each of them doesn't really interact that much with the other 2. So, we're lucky in a way that we can build those 3 up. But in order to grow them, and as you said, what do the governments need to do? It's power, it's permitting as well. Speed of power is number 1. There's another one which, my friends in DO Telco might not want me to say this, but the cost of network connectivity here is a little bit higher than it is in other markets, to put it lightly. And that can be an impediment to hyperscale growth. It hasn't stopped the growth because we can see the growth is rocketing ahead. But I think it is reasonable to say that it might be a slight headwind against some of that growth. And if we could lower the cost of connectivity across the region, that may help. And as Kamel said, another thing that I've noticed in this market, which was very much dominated by government contracts initially, is now starting to grow its own enterprise business, enterprise retail, enterprise hyperscale, and also new AI business, and as Kamel said, connectivity into other areas. So, the UAE or these markets, maybe Saudi as well, start to become interconnection points, a little bit like markets like Singapore have become in the past, or Frankfurt, where that interconnection starts to pull through and then grows its own additional organic enterprise business, which is essentially stemmed from interconnections.
Good. Tom, we're seeing huge commitments across the region. 35,000 NVIDIA Blackwells to the UAE. I hope NVIDIA is giving you royalty fees. 150,000 accelerators.
We've got at least 1 Blackwell in the UAE.
150,000 accelerators in Saudi and gigawatt scale campus plans. So what's the biggest misconception governments still have about how long it takes to commercialize AI compute, and how do you get them to structure partnerships that match that real piece?
Listen, I think that this touches on a question that is discussed a lot in the industry around sovereignty. What can governments do to really kind of achieve their full AI sovereignty? I think that in the fact of the matter is, total full sovereignty, I think you're unlikely to see in many countries. I mean, US has it, China has it. To think that every country can kind of fully have their own full stack AI infrastructure, that probably isn't realistic. However, countries can still do a lot to significantly reduce their dependence on outside tech. So, that's what you're seeing. You're seeing in some countries in Europe. UK is moving quickly. I believe this region will also move very quickly. And so, so whether it's sort of having more of the data centers, having more of the kind of the data that's stored kind of locally, having more sort of local players that are part of this full stack infrastructure, that's what I think needs to happen. I think reducing dependence is realistic, and that's what government should be focused on. I think delivering a full stack is probably not realistic.
Very much. Neutral colocation is now operating alongside sovereign-led mega projects like Project Stargate, UAE, and Saudi's 500 megawatt AI builds. What's the toughest conversation you're having with regulators or utilities about making these models coexist, and how slow could the alignment be in the region's competitiveness?
That's a good question, and this is something we discuss on a daily basis with the government, with the regulator, because at the end of the day, as a neutral colocation provider and as a big investor in this economy, we invest hundreds of millions, we need to ensure that we don't compete with with the government, because we cannot compete with the government. We cannot compete with those guys. They have unlimited funds. We don't. So what we need to do, what our strategy is to really coexist. We believe that that investment is, the investment they are doing is crucial to basically build this AI digital ecosystem within the country. And based on that, a lot of players like us are going to benefit, because you will have a lot of other players who are coming to build on that infrastructure. So we see that cooperation as an opportunity for us, because it creates more momentum, it creates more digital awareness and scalability. So we don't see it as a competitor. In the contrary, we see it as an enabler and enhancer for the overall for the overall market.
All right, great. Khazna is central to the Microsoft G42 expansion at a moment when geopolitics and export controls influence every design choice. So how do you structure long-term public-private partnerships that can withstand regulatory shifts across multiple jurisdictions without slowing the build?
Yeah, I mean, for us, right, we look at it two ways. We look at it from a local and international perspective, that we try to be ahead of the game when it comes to some of these geopolitical nuances. As the national champion for data centers out of the UAE, we're privileged to have access to the leadership. We're privileged to have access to the G42 group that can then lobby on the behalf of the UAE in the US and elsewhere. But at the end of the day, we still have to deliver. We still have to build. And the conversations that we are having right now with the hyperscalers, the global frontier labs, or the neoclouds, when can you get me 100 megawatts? And when can I double that capacity? Is it in another 24 months? Can you deliver 40 megawatts a quarter? These are discussions that 2-3 years ago we couldn't even fathom these discussions, but we're having them. And so we're also looking at how do we structure ourselves with our supply chain to be able to stay ahead of this demand curve. And will that demand last for the next 10 years? We don't know. But as it exists right now, we're structuring ourselves with our partners, with the supply chain, to be able to stay ahead of the demand curve and to deliver, because at the end of the day, that's what matters. These 35,000 GPUs that are coming to the UAE, if they don't have a home, that's going to be a problem. And so we want to make sure that we're building, we're delivering, we're commissioning, and so that that demand, that capacity, could have a home inside of our data centers.
Let me ask everyone on the panel here. If the Gulf wants to remain a top 3 global destination for AI infrastructure rather than a temporary hotspot, what is the one element of the public-private model that needs to be standardized across the region in the next 12 months? Should it be power pricing, land access, regulatory process, workforce mobility, or something else?
Listen, I can have a go. Actually, I think in fact, it's probably something else. It's about demand, right? I mean, so we're building very quickly around the world, but we're building in those places where we see demand for our AI cloud and AI cloud infrastructure, right? That's where it makes sense for us to prioritize. So a lot of that, of course, is in the US at the moment. That's where many of the startups, the AI startups, AI natives are. You have the big hyperscalers in the US. But what's going to be global and what's going to make AI consumption global is enterprise adoption, right? And so I think, again, if the UAE wants to be one of the sort of top 3 players and to have the infrastructure there, they probably need to think about it from the demand side and how one can stimulate demand for the big AI cloud businesses. Ultimately, there are several big AI cloud businesses in the world. We're one of them. And we build around demand. We want to make sure the demand is there.
Okay, great. So before I ask the last question to our panelists, does anybody in the audience have any questions? Paul, Stephen Beard, anybody have questions? No. All right. So before we close, I usually ask this question in the United States because baseball is a national pastime, right? But we're here in the UAE, so I'm going to ask this question: if a championship camel runs the full 10 kilometers, what kilometer mark are we today?
We're just at the first. There's a long way to go, and I think the investments that have been made in the last couple of years, we're now starting to see the rewards of those investments and those strategic decisions that was made at a leadership level. We're now starting to see the benefits of it. People question us and said, "Why are you building 100 megawatts in Ajman? Ajman is not the place to be." But guess what? It's sold out. Why are you building a 5 gigawatt campus in Abu Dhabi? Guess what? The demand is there for it. And so I think we're just at the 1 kilometer mile for the race, and we want to be there for the full term.
I think in this region we're still scratching the surface. We're still, still the momentum is there. The demand, as Paul was saying, it's very key because you need to go beyond 2-3 players, but to get more enterprises and more key players coming in and seeing this region as strategic for them. And this require all the above. Requires government, regulations, connectivity, power, capacity, talent to make this region a champion in AI. Just having power and space is good, but it's not enough because you will need all the above. You need the power, you need the space, you need the land, you need the connectivity, you need the talent to become a competitive on a global scale.
Yeah, I think that the Camel, it's not only the first kilometer, I think it's the first 100 meters, and I'll explain why. I think that, again, up until now, what is the consumption? It's AI startups and it's the hyperscalers. But actually, if we look into the years ahead, that's a small fraction of what we're going to see. And it's going to, as corporations around the world start to do meaningful AI deployments, this is going to just make this industry grow by many, many, many multiples. And the fact is, we're just at the beginning of that journey, right? Just at the beginning. We're seeing some industries move a little bit faster. We have a healthcare and life sciences vertical. We've seen some interesting adoption, but it's just the tip of the iceberg there. And I think that, to the question, we often get the question around AI bubble, the AI bubble, you have to break it down, right? It's will every single AI business model that we see today sustain in the years to come? Absolutely not. But will we see overall growth of AI adoption at the enterprise level? Absolutely yes. And I think that's what's going to drive the growth, and we're just starting.
Great point. And I think you touched on the use cases, which is really important. The use cases will drive new startups, which will be new unicorns that we haven't heard of yet. And if some of those can start here, amazing. We need the power. You touched on the talent. Actually, we haven't talked about that, but that's really what makes this camel fly, and maybe it's a digital camel or it's an AI camel by the time we get to the next few kilometers. So, yeah.
So next year, flying camels, I think.
There you go.
AI agent camels.
Use
Good, okay. We're out of time. Thank you very much, everybody.
Thank you very much.